This is The Bottom Line. The Bottom Line on 938 Live.
Only two family-owned banking groups remain in Hong Kong after OCBC offered $6.2 billion for Wing Hang Bank. Dah Sing Banking Group has signalled it's not looking for a buyer, but Bank of East Asia has said it's open to the idea, but at the right price. Travis Teo finds out from Ivan Tan, Director of Financial Services Ratings at Standard & Poor's, what makes Hong Kong banks so attractive to local lenders.
All the three Singapore banks are pursuing regional strategy right now. DBS, OCBC and UOB. As part of their regional strategy, they are trying to take advantage of the regional trade flows. So some of the Asia countries that are growing quite quickly and an integral part of these regional trade flows include Indonesia and China as well. So the attractiveness of Hong Kong is that it serves as a gateway to the greater China market, which will, better position OCBC and the Singapore banks in general to grow their business.
Right, but we have seen several write-downs by DBS as it went through its integration process after buying Hong Kong's Tao Heng Bank in 2001. So do you think OCBC will face similar issues in their acquisition?
I think in this regard, it's perhaps not relevant to compare OCBC and DBS because the DBS deal took place more than 10 years back, when the Singapore banks in general do not have such a firm regional strategy in place. When you acquire a mid-sized bank and try to compete domestically in Hong Kong or China with the domestic banks, it will generally be an uphill task. But I think in the case of OCBC and also recently DBS has reorganized the Hong Kong operations, it's more part of a regional proposition that they have. So I think the times have changed. For OCBC's case, the price to book is less, and I also believe that it fits in very well with the broader regional strategy that they have.
OCBC's offer for Wing Hang is 1.77 times of book value. If we compare it to a recent purchase of Chong Hing Bank, also in a Hong Kong lender, that was for a book value of 2.08 times. Comparatively, do you think OCBC secured an attractive deal?
The deal is a fair one. It is widely perceived to be a slight discount because I think the market was expecting between 1.9 to 2 times price to book. From a cost-benefit analysis viewpoint, I think it's fair. On the cost front, while 1.77 times might seem slightly lesser if you compare with some of the other deals, it's still a fairly significant cost to OCBC Bank. For example, the Tier 1 ratio for OCBC is 14.5% pre-acquisition. That will decline to 11% pro forma post the acquisition of Wing Hang Bank. So I won't consider that deal to be cheap. And if you take into account the ultimate objective of OCBC Bank, right, which is to try to take over full control of Wing Hang Bank, then your offer has to be reasonably attractive such that the minority shareholders will want to sell their share to OCBC Bank.
Now, with only two other family-owned banks remaining in Hong Kong, and essentially only one which is open to an offer, which is the Bank of East Asia, do you think UOB will be pressured to make an offer to enter into the Greater China area?
It is possible, but I think the likelihood at this point is quite low. All three banks, as we discussed, has a regional strategy, but there are differences in the way the banks have been pursuing this. So if you look at DBS and OCBC, they have in the past relied on inorganic growth through M&A. UOB, on the other hand, it has been a slow and steady growth through the organic growth in the countries that they already have a presence in. My view is also that UOB is the most cost-conscious of the three Singapore banks. If you look at current valuations, price to book of 2 times seem to be more or less the norm. As we discussed, it's not exactly cheap. And knowing the management mentality of UOB, they might be more reluctant to pay the premium that is necessary to buy over a Hong Kong bank.
Ivan Tan there, who's Director of Financial Services Ratings at Standard & Poor's, speaking to Travis Teo on The Bottom Line.